Hi there, good evening. You're tuned into Business Day right here on ET Now. I'm Ava Andabash. Let's take a look as to how the markets panned out today before we take you through the top headlines. Well, what started off as a lackluster session went on to see intensified selling pressure in late trade. We just about managed to cling on to the 6,000 level. It was a meltdown for the broader markets as well, and really a very rough session for the rate sensitives. A poor market breadth by the day's close, and it was 54 points down for the Nifty at 6,001, and for the Sensex, we shaved off 0.8% to end at 19,817. Lots of big stories. We keep you up to speed after the top headlines. The government turns to tax expert Parthasarathy Shom to iron out issues like GST design and CST compensation. Finance Ministry sources indicate that Finance Minister P. Chidambaram could announce an outline of constitutional changes required for GST in the budget in the next month itself. The government may finally bite the bullet on diesel vehicles in this budget. Sources tell ET Now that a hike in excise duty on diesel cars is back on the table. Bajaj Auto's third quarter performance is in line with street estimates. Profits are higher by 3% at 819 crore rupees. The management says the near-term outlook for the two-wheeler industry remains bleak, with market exports showing no signs of a recovery. Yes Bank's management says it's looking to buy RBS's India retail assets, and that comes after RBS's deal with HSBC ran into troubled waters after the RBI refused to clear the transaction. Grounded Kingfisher Airlines tries to fly yet again. The CEO meets aviation regulator in an attempt to convince him about its revival plans, but the DGCA is not convinced, says the plans lack details on funding. Straight to the equity markets, and not a very encouraging day of trade. It was the selling pressure which really weighed down from the entire rate-sensitive basket, and that put pressure on the overall indices. Not a better picture when it came to the broader markets either. You had the mid as well as the small cap index, which went on to shave 1.5% almost by the day's close. In terms of sectoral movers, well, most of your sectoral indices were deep in the red, starting off with the auto index. Metals came under a lot of pressure, as did the banking index. It was only oil and gas which saw a flicker of green by the day's close, that too very marginally. So the index laggards included Hindalco, you had Reliance Infrastructure under pressure, Jayaprakash Associates stumbled, as did Maruti Suzuki. TTK Prestige put out its numbers. It was a solid run-up in anticipation. Remember, the numbers came out just post the market close. The Q3 profits higher by 27% at 44 crore rupees, and the net sales clocked in at 438 crores. That's higher by 31%. So all in all, it was in line with street expectations. Reliance Industries, that was your big outperformer for today on account of the fact that you had SR Oil post good GRMs. So it surged 2%. That's its biggest percentage gain since the 28th of December, hitting a one-week high. The GRMs from SR Oil are an indication that this trend is likely to continue in the sector, because remember, for the past 2 quarters, the refining margins have been leading the results for Reliance Industries. Not just that, the reports of Rangarajan recommendations may be presented in the CCEA soon, and higher gas pricing hopes are likely to keep traders on the long side. Nomura also upgraded the counter with a target of 1,000. Tata Motors, on the other hand, it fell under quite a bit of pressure on account of the Group December wholesale units coming in at 98,968. The JLR sales also came in below the expectations of 34,000 to clock in at 32,282 units this time around. Den Networks, that one put out its results yesterday post the market hours, and it was a good set of numbers which really was cheered by the street in today's session, 2% higher. It posted a consolidated net profit of 17 crores. This is coming in versus 15.6 crores, and the income from operations came in at 235 crore rupees versus 202 crores. SR Oil has pointed out that was clearly a good set of numbers just yesterday. The Q3 profits came in at 32 crores. This versus a loss last time around. Sales coming in at 23,817 crores. So that's a big bump up of a good 85% on a year-on-year basis. And of course, it was the GRMs which the street really read into, $9.7 per barrel. This coming in versus $2.8 per barrel. Moving on then to Deccan Chronicle, that was hit on lower circuit. Investors really left in the lurch after the NSE suspended its equity trading from the 23rd of this month on account of non-compliance of the listing agreement. Let's pull up some of the counters which did well in today's session. Well, you had HCL Technologies one day ahead of its numbers, spurting up by a good 1.5%. Reliance Industries, as stated before. Dr. Reddy's perked up, as did Power Grid, ending higher by close to 1%. Time then to get in some market perspective and important investment trading ideas.
If we were to see a massive correction in current account deficit, I think then we could actually see whether we can be on a cusp of a multi-year bull market. But at this point of time, with the current account deficits which have come for the September quarter and the likely numbers for the December quarter, I don't think we are in comfortable territory there. I think a telecom still represents the only consumption cyclical which is trading cheap relative to its history.
If I'm going to make an aggressive call, I think India GDP will underperform consensus, moving out of defensives into large cap IT, into cement. Perhaps, you know, the technology stocks or the telecom stocks have had a good run, so I think we'll be generally cautious on that. Global liquidity has a decent chance of drying up at the end of the year, so if we don't have our economic house in order in the next few months, the pressure on the currency can get intense, and that to me is the big risk, you know, for the rest of the year.
So a pretty dismal day for the equity markets. What about the F&O activity? How did that shape up today? Let's get in Navneet Saluja, who's standing by from our research desk. Navneet.
Hi, Avan. Definitely not a good day for the markets. You saw a huge amount of profit booking coming in the last hour of the trade. And if you look at the closing of the Nifty January futures, they closed at 60.17 with a premium of around 19 points. And the futures shared about 3.3 lakh shares in open interest. And if you look at the options data, the Nifty PCR slipped to 1.06. Well, in the first half, we saw put writing, but in the second half, it was clearly more of call writing, which we saw, because of which the Nifty PCR2 fell in the last hour of the trade. So have a look at strikes like 6100 call, that added significant close to 11 lakh shares. 6000 call strike added about 5.6 lakh shares. And on the put side, you saw shedding coming in at 6000 strike, which added significant amount of open interest in yesterday's trading session. So 6000 strike today shed about close to 7 lakh shares, and you saw addition coming in at the 5700 put strike. And talking about the stock futures, well, among the Nifty gainers, you had stocks like HCL Technologies and Reliance Industries, which did well. So long positions were seen there. Also, Dr. Reddy's were up and about in today's trading session. On the short side, you had Hindalco, Reliance Infra, JP Associates, where short positions were being built up. And also, you had some of the auto counters like Tata Motors, Mahindra and Maruti, which were down today. So short positions built on the future side. And Reliance Communication tumbled about close to 6%. So short positions seen there as well. And you saw long unwinding coming in IVRCL Infra, sorry for that, and fresh shorts also in Idea. Remember, this counter was up about 9% in yesterday's trading session, so some amount of profit booking was seen today, and it was IGL which actually outperformed the mid-cap index. Also, the stock was up by about close to 2%, long position seen there. In terms of participation, well, if you look at the turnover towards the closing on NSE, we did about 1.3 lakh crore of turnover.
Okay, thanks very much for summing up the F&O action, Navneet. Moving away from that, the big result for today was Bajaj Auto. It ended the day lower by close to 2% in spite of earnings in the third quarter, which were in line with street estimates. The profits were higher by 3% at 819 crore rupees. Revenue stood at 5,413 crores. And the company's overall market share now stands at 32% versus 33% on a sequential basis. Let's get in a detailed analysis and find out more on the Bajaj Auto numbers. Yatin Mota standing by from our research team. Results in line, Yatin.
Clearly, Avan, results for Bajaj Auto coming in line with most of the analyst anticipations. On the margin front also, the company has delivered an adjusted EBITDA margin figure of close to 20%, which was largely in line with what the analysts had anticipated. Also, if you talk about the top line and the bottom line, largely in line with estimates, almost single digits growth coming in because of slowing volume growth that we had seen during the quarter. Almost 5% in terms of volume growth is what company posted during the quarter. But the important point to watch out here, and clearly the management commentary was sounding a bit cautious as far as the volume growth going forward is concerned. They are anticipating that they won't be able to meet the FY13 volume guidance of 5 million vehicles overall basis. And if you talk about the export market also, management has clearly mentioned the fact that the overseas market, especially in Sri Lanka, they don't see immediate volume recovery there. Also, the competition has started launching new bikes, be it Hero MotoCorp, be it Honda, or be it TVS. All of them are launching new bikes. Bajaj Auto has also again launched two new bikes in the 125 and the premium bike segment. But clearly on the competition front also there have been analyst concerns, and clearly the management indicating that the recovery and the short-term outlook will not be that healthy as far as the two-wheeler industry is concerned.
Thanks very much, Yatin, for giving us those details. So perhaps it's a cautious management commentary that the stock read into. Moving on then to the banking space, and Yes Bank came out with a solid set of numbers, and this time around it was in line with what the street was expecting. So for the third quarter, 342 crores was the net profit. Net interest income stood at 584 crores this time around. It did hit a new high today, but tempered off by the day's close. The most important development, though, for Yes Bank was the fact that the management has confirmed its interest in buying RBS's India retail assets. Now, remember that this business was almost bought by HSBC till the deal ran into troubled waters after the RBI refused to clear the transaction. Let's get in more details from Anirudh Ghosh, who's standing by. Anirudh.
Yes, a good set of numbers for Yes Bank. Profit growth of about 34.7%, driven mainly by a good growth in their non-interest income as well as their net interest income. Also, their margins expanding by 10 basis points to that critical 3% mark. But then the most important thing, of course, that came out of today's press conference was the fact that their management really in some way did confirm that Yes Bank is in the race to buy RBS's India retail portfolio. Of course, that portfolio has been on sale for quite some time now. Reports came in at the beginning of the week that Yes Bank could be in the race, and their CEO, Dr. Rana Kapoor, did in fact mention today that they would really be looking at this particular piece of RBS's assets, that it would be a good fit for them. Of course, he did not elaborate any further as to how much they would be willing to pay for it and how it would really be integrated into the system. But also, of course, the bank is in the process of setting up a retail brokerage business. They also did say that they would be open to an inorganic growth on that front as well. So clearly, Yes Bank is looking at a good amount of growth coming in the next year. They're also targeting a good growth in their savings account. Remember that their 7% savings deposit scheme has brought them about a 300% growth in their savings account balances. So clearly, a lot of growth coming in as far as the deposit growth is concerned, at a time, of course, when deposit growth in the entire banking system has been much lower than the RBI's projection of 15%. So, of course, all in all, good set of numbers, margins holding up, and of course going forward, the bank has indicated that they would be looking at maintaining the margins around the 3% mark, and that they would be looking at maintaining credit and deposit growth at these current levels.
Thanks very much, Anirudh, for giving us those details. In fact, Yes Bank's Rana Kapoor today reiterated that they are indeed looking to expand their retail business in a big way, and going ahead, if a promising and attractive opportunity comes along, the bank will be ready.
Right now we are working on both tracks. We hope that in the April to June quarter, this small venture, organically at least, is off the ground. It's meant to complement our liability strategy, so that's really the primary objective of our retail broking business. We don't expect to be in the institutional broking business. And if there is a good team which comes with a good network of clients, we'll be very receptive.
Moving on then, and the government has turned to tax expert Parthasarathy Shom to iron out issues like the GST design and CST compensation. Finance Ministry sources indicate that Chidambaram could announce the outline of constitutional changes required for the GST in the budget next month itself. Bihar Finance Minister and Chairman of the IMPART Group of State Finance Ministers of GST says that the IMPART Group of Ministers will take a final call on the structure of GST on the 28th of this month.
So both of these committees are likely to submit the report by 21st of January. And I've come to know that on most of the points there is a convergence among the states. But there are still some issues which can be sorted out later on. And FM has assured that after the submission of this committee's report, and it will be discussed in our IMPART meeting on 28th and 29th. There is a broad consensus, then we'll be able to announce some of those things in his budget speech.
But what are the issues that are still sticking out? That is why sources in Finance Ministry tell us that you've been asked to perhaps consult Dr. Shom as well. What are these issues?
Now, there are many issues like autonomy of the states, like CST compensation, dual control, what shall be the threshold limit, about the exemptions. So these are some issues, what shall be the revenue neutral rates. So these are 5 or 6 issues on which states have different view.
And another voice, Amit Mitra, Chief Minister of West Bengal, says that unless there is complete consensus on all matters from all states, the implementation of GST will be delayed.
Finance Minister has created 2 committees of secretaries. In fact, one of the committees meeting today. And all issues are open, they will be discussed, and they have to be solved on a consensus basis.
Meanwhile, the Madhya Pradesh government is adamant that the structure of GST needs to be changed as the states are demanding complete autonomy.
As regards design of the GST, there are wide differences, and centre's attitude is not helping to solve this issue. Every state wants that state autonomy should be preserved. But the design which has been presented through Constitution Amendment Bill, the state autonomy is being affected very badly. Revenue neutral rate, the scheme is not even revenue neutral rate. It will be a negative for states and positive for centre. This position is also not acceptable to many of the states. Madhya Pradesh is one of them.
And as the budget is approaching, the captains of the Indian industry met Finance Minister P. Chidambaram with their budget demands. The likes of Anand Mahindra, Adi Godrej and Naina Lal Kidwai will be making presentations before the Finance Minister and his team. High on the agenda are measures to boost growth, spur investments, a stable tax regime and the implementation of the goods and services tax. Now, diesel vehicles, we understand, might just get more expensive in 2013 if the oil ministry has its way in the budget this time around. Government sources tell ET Now that the finance minister is considering a hike in the excise duty on diesel vehicles to offset the glaring price of differential and growth in the consumption between petrol and diesel. What exactly does this mean and what are the developments on the same? Let's get in Nitya Balakrishnan, who now joins in with the latest details. Nitya.
That's right. What we're picking up from sources in the oil ministry is that this time around, what Pranab Mukherjee did not do could very well be implemented by Pioneer P. Chidambaram. In fact, in the pre-budget consultations between the oil minister Veerappa Moily and P. Chidambaram, the decision to actually seriously reconsider implementing the excise duty hike on diesel vehicles is something that the finance ministry seems to have sent out positive feelers on. Now, the oil ministry has suggested that it should be done in a differentiated manner between passenger and commercial vehicles, small, medium and heavy vehicles, but it is imperative to go ahead and hike the excise duty on diesel vehicles because simply increasing diesel prices in a staggered manner may not be enough given the fact that the price differential between petrol and diesel is alarmingly high and the consumption when it comes to diesel has been way ahead in terms of when compared to petrol. The oil ministry feels that to arrest this particular consumption in diesel, there has to be a decision taken to implement a hike in excise duty on diesel vehicles. Of course, it is something that the auto lobby has resisted very heavily in the past. It was not implemented in last year's budget, but this time around, North Bloc seriously considering it, given the fact that they are also looking to hike diesel prices. So very well, going ahead, it remains to be seen whether P. Chidambaram decides to bite the bullet on this crucial decision, but definitely one that oil marketing companies as well as auto majors have an eye on going ahead.
Thanks very much, Nitya. So we'll wait and watch as to what comes out of that. But the oil minister says that he is seriously considering a revision in the fuel prices. The petrol prices, which are free from government, remember, have already been hiked by 35 paise per litre effective today. And this, of course, leaves us with the controversial and politically sensitive diesel, kerosene and LPG prices.
Insofar as we are concerned, you all know that report has been already submitted from our Kelkar, Vijay Kelkar, and he has given a number of proposals. So that is under serious consideration of the government. All the price hike or price reduction, all those proposals are under serious consideration. We have not taken a decision.
Okay, that is the oil minister talking about a fuel price hike, which is perhaps on the cards. But to the banking arena then, and the finance ministry has set the ball rolling for creating a holding company structure for public sector banks and now has sought the law ministry's opinion before it moves cabinet. Mrinalini Krishna is standing by with more details. Mrinalini, what is the finance ministry sought this opinion on?
Well, the government's definitely looking to move on creating a holding company structure for public sector banks. What we are picking up from finance ministry sources is that they've written to law ministry seeking its opinion on the laws that need to be amended for creating such a holding company structure. Remember, laws like the State Bank of India Act, the State Bank Subsidiary Act, Bank Nationalization Act, these laws will have to be amended for the holding company structure to come into place. What we are also being given to understand is that once the law ministry vets this holding company structure is when the finance ministry is going to move cabinet with the proposal, and that is likely in the next 3 to 4 weeks. Remember, this is a proposal that was thrown up in last budget, in fact by Pranab Mukherjee, the then finance minister, and this was essentially done to make recapitalization of public sector banks easier. There has been a lot of debate that has been going on about this creation of this bank holding company structure, how it is going to be done, how the capital, what is the kind of capital that needs to be required. So, and of course there were some concerns of the RBI as well on the regulatory side. So clearly finance ministry working overtime to smoothen all of those issues out and then move cabinet with this proposal of creating a bank holding company structure. If the cabinet approves this will then have to go to the parliament with and then the necessary laws will have to be amended. But clearly the government has made a move on this bank holding company structure for public sector banks.
Thanks very much for those details, Mrinalini. Moving on then, and Reliance Communications was in focus today. In fact, the counter ended low by close to 6% as in fact you had a communications maker, Alcatel-Lucent, which has won a $1 billion contract to manage Arcom's telecom networks for 8 years in eastern as well as southern India till 2020. Here's a word from Gurdeep Singh, CEO Wireless at Reliance Communications on the same.
Today we have awarded is a multi-year billion-dollar contract to further improve the network performance and customer experience. This is one of its own kind of an end-to-end managed service contract in India. It's the first of its kind and perhaps the largest globally. The reason is that the scope of this contract involves wireless business, wireline, enterprise, fiber, and also the utility operations. Over 15% of our manpower will transition into Alcatel-Lucent.
Straight to the aviation space, and just 2 days ahead of the crucial meet of Kingfisher Airlines in Mumbai, the CEO of the suspended airline met the DGCA today and made another attempt to convince the aviation regulator on its revival plans, and that really kept the stock afloat. Sources, though, now tell ET Now that the DGCA is not convinced with any kind of Kingfisher's explanations, as it had failed to provide enough details when it came to the funding. Let's get in Sumit Chaturvedi, who now joins in with more on the same. Sumit, what are you picking up?
Kingfisher Airlines CEO Sanjay Agarwal today came and met aviation sector regulator DGCA. He apprised DGCA of the current situation of Kingfisher Airlines. He told DGCA that company has obtained no objection certificate from some oil companies and from some leasing companies. But as far as no objection certificate from airport operators, including Mumbai airport operator and Delhi airport operator is concerned, they have not got NOC from them so far. Also, there is no commitment from UB Group on funding of Kingfisher Airlines. Well, in revival plan submitted to DGCA a few days back, Kingfisher Airlines had told DGCA that UB Group is ready to provide them over 600 crore rupees for financing the airline, but there is no commitment Kingfisher Airlines has shown to DGCA so far. But Kingfisher Airlines also told DGCA that it is ready to fly from summer schedule.
Thanks for those details, Sumit. Meanwhile, the aviation minister has said that Kingfisher's plan lacks fiscal depth and that the airline will not be able to fly with the current plan. He also said that Kingfisher has not done anything different today. Let's hear him out.
I haven't had a chance to talk to the DGCA, but in general I can say that these, the plan he had submitted before doesn't mean anything. It has no fiscal depth. With that plan, he won't be able to run the airline, and banks will not give him working capital. So therefore, he has to come up with a concrete plan with a lot more money than what he's saying now. With that kind of money, he can run only for a few months. Then what?
So the DGCA is not satisfied with the plan?
I haven't talked to him, I'm saying. This latest thing, I'm talking what he had submitted before. And basically today he hasn't done anything more really. Even before he had said that oil companies, there is nothing outstanding.
In fact, the troubled Kingfisher Airlines today moved the Supreme Court seeking a stay on the Karnataka High Court order that had directed the airline to pay a sum of 505 crores of the 468 crores in TDS it owed to the tax department, and the deposit the remaining 50% bank guarantees to the court. The plea that is expected to be taken up by the Chief Justice's court on Jan 21st also says that the sought amount is much more than what the company actually owes the tax department. That brings us to an end of this edition of Business Day. Thanks so much for watching. Keep it with ET Now.